Okay, I'll go ahead and kick it off. Thanks for joining the Dreamit SecureTech AMA webinar. My name is Bob Stasio. I'm the Managing Director for SecureTech at Dreamit. We also have my colleague Cameron Watts, who's on as well. He is the Program Manager for SecureTech. He works with me in the vertical, and we also have Charles, who is a recruiter. He'll be on helping manage some of the questions. So I'm going to spend about 25 minutes going through a presentation, kind of explaining what Dreamit SecureTech is and what we do. And I'll open it up for some questions at the end, spend the maximum amount of time on questions. So I'll just go ahead and jump into it. So what is Dreamit? I guess kind of in the military, we had this term, bottom line upfront, bluff. And this is kind of how we see what we do at Dreamit. So Dreamit is something designed for startups beyond the accelerator stage. We don't even really like to use the term accelerator. Basically, one of the ways we look at it is a lot of other accelerators or incubators are kind of more early stage, get your idea started, going from soil to seed. We take you from seed to and beyond, right? So we're taking a company that has some traction, has a few customers, has a real product, and we're getting them more customers and rapidly accelerating their growth, and then getting them in front of a huge network of investors in a very short period of time. So that's kind of what we're all about. That's us in a nutshell. And I'll explain a little bit more of the details as we go along. So why we're different than other accelerators or other programs? We're typically designed for later stage startups, and us in particular, what my vertical does is we look at security startups. We give a more stage appropriate offer to these startups, so there's no large upfront equity stake. A normal typical accelerator program will say, okay, we'll give you $40,000 for 8% of your equity. That's actually a pretty bad deal. And a very bad deal for most of the startups that we have coming in, because they're just at a bit of a later stage. They're actually have a bit of traction. They've raised a little bit of money already, and that would usually be like a down round for a startup coming into our program. So we don't do that. We'll explain a little bit more how that works. There's also no relocation required. So we don't require you to relocate to Philadelphia, where we're headquartered, for 14 weeks. Far more than half of the participation is remote, and anything that is in-person participation is geared towards customer meetings and investor meetings. So it's things that you'd be doing anyway in person, and we're just only doing kind of the things you have to do in person, leaving you kind of maximum flexibility to run your company, because most of the entrepreneurs that come into our program are they're a little more mature. They have, they're a little older. They may have families, so we don't require you to relocate or anything like that. Okay, so how do we kind of work? We look at attracting companies from a global perspective. We look at companies all across the world. Like I said, we're headquartered in Philly. We have an office in New York, but we do tend to get companies from all across the U.S. and additionally all across the world. A couple of ways to kind of show how we're different. Well, first of all, we are primarily a venture capital fund. That's how we make money. But our tied accelerator program really kind of feeds our accelerator fund, our venture capital program, and who we invest in. We've been rated a top 10 accelerator in the US. If you kind of think of, we're often thought about in kind of the top three. So you have like Y Combinator, Techstars, and us. We're definitely kind of thought of in that way. Over the last 10 years, we've invested in 300 companies. And if you look at our overall valuation of those companies, it's about $2 billion at this moment. We're also one of the top 25 most active venture capital investors in the US. Sorry, a little slow there. We've got a great track record across many different verticals. Historically, Dreamit has been very vertical focused. You have health tech and urban tech are kind of the verticals that have been around for a while. We've recently started SecureTech. We've gone through one focused SecureTech cohort already, which I'll talk a little bit more about. But these are some of the companies that have been accepted into the program that are doing really well. And one of the real metrics we measure ourselves by is how many companies that join Dreamit within 6 months go through a raise, actually raise around, and that sits at about 50 to 60% at this point. So we're really proud of that fact. It's a very good statistic. It kind of puts us at a top tier, and we're seeing that trend currently with even our current cohort. It's tracking in that direction. So a little bit of the SecureTech profile and a touch on my background as well. So when we started the SecureTech vertical, Dreamit went out and recruited me from IBM. I have a background about 10 years in the military and government side, about 10 years in the private sector. So I've worked in, my initial government time was in the Army as a military intelligence officer, worked on signals intelligence, cybersecurity, also physical security, deployed multiple times to Iraq. Left and worked at the NSA for a while in kind of a bit of their cyber operations. Left the government, started my own company for a couple of years, sold it, and then ended up in working in enterprise space, first at Bloomberg, then at IBM for a few years, where I was a product director for a cybersecurity product. So I have kind of a deep experience and background in both the use side, the operator side, and actually using security products, but also selling them, product management, and having my own startup as well. So kind of have a broad experience across that. My program manager, Cameron, who's on here as well, he also has a background in the military and has a lot of connections in that world as well, especially in the special operations community. And the way we look at bringing our startups in and who we can really help is I break down the SecureTech profile into 3 different verticals. I call it logical, social, and physical. And logical being cybersecurity products that could be software or hardware, generally focused on helping out the SOC, the Security Operations Center. Physical is anything that can protect people and property. Those could be things like drones or even access control, monitoring, things of that nature. And then social is kind of a newer side of things where, to me, it looks at the security of human communication, the kind of human interaction that could be fraud, fake news, things like that. So we look at bringing in companies across all those different areas. We have expertise that kind of spans across this and connections to customers and investors as well. So those are generally, who we're looking for, what types of startups. It's a bit of a broad approach, but we and I'll get on this later. We're really looking at companies that are solving very challenging and hard problems in innovative ways. When you come into the program, after we go ahead and recruit companies, and by the way, we generally look at about 300 to 400 companies per vertical. So each time we go out and do this recruiting stint, we're looking at about 300 to 400 companies, and we pare them down. We filter them down to about the best 5 to 10. Generally, it's about 8, but we don't have a set number. We just want to get great companies in, but we're very, very selective on who we take in. When we take in companies into our program, we start and kick off what we call our 14-week acceleration period. And the way it basically works, it's broken down into 3 distinct pillars. The 2 most important pillars are the 2-week customer sprint, where during a 2-week period, you're going to be going in front of 20, usually in the neighborhood of 25 to 30 different customers, which you'll pitch. It's essentially a very, very concentrated BD period. And then there is a 2-week period where we call investor sprints, where you're in front of different investors, pitching them, trying to raise your next round, either a seed or a Series A. During the entire course of the period, we're giving very domain-focused, vertically aligned, deep expertise. So coaching is what we call it. But we have generally at least 1 meeting per week. Sometimes it's more, on helping you build out different materials for these customer sprints, for the investor sprints. A lot of practicing, a lot of rehearsal. We're very, very hands-on involved, helping you kind of rip apart your business model, put it back together, and giving you a lot of background from our experience as entrepreneurs or in different parts of the industry. So there's a lot of that happens across the entirety of the 14 weeks. One of the things to touch on, probably one of the most important ones, is customer sprints. So that's the kind of the first pillar that you tackle when you come into Dreamit. You'll come in and it's a 2-week period that we do these sprints. It's across 3 to 4 cities: New York, DC, Boston, Philly, and Tampa. A lot of it just kind of depends on which are the best meetings we want to line up. It could be anywhere from 3 to 4 cities. Last time we did it, it was New York City, Boston, Philly, and Tampa. And last set, we had 28 different meetings that we set up for our startups. So our startups go in, they pitch a CISO for about 15 to 20 minutes on what they're doing. And it's a bit like speed dating. The CISO is going to know very quickly if they're interested or not. We do a lot of practice to make sure you can get across the point of what your company is doing in that period of time. They say, okay, this is interesting. I'd like to check this out, like to do a pilot. And then it's kind of up to the company and the customer partner on how they want to go forward. We have a really expansive network of companies that we're going to get you in front of. Well, I'll go to a slide in a minute on who they are, but generally you're meeting with a lead decision maker, a CISO, a CSO, or senior level director that can kind of make a decision to move into a pilot. I'll say, just from like, a lot of people ask me, well, what's the success rate of this? It really depends on what your company is doing. So companies that went on our program last cycle, they just kind of wanted a bit of validation and feedback from decision makers on what their product was doing. And that was great. And they were maybe a little earlier and they didn't really jump into any pilots. And we had some other companies that were more mature, more along the way, and they wanted really deep business development. We had one company in particular that was probably the most mature in our program that walked away with somewhere in the neighborhood of 6 or 7 pilots that they're actually working on right now. Is that going to be typical? It really just depends on what your product is. What's the need? Is it a pressing need? Some companies got 1 or 2 pilots, some companies got 6 or 7. So it just really depends on, what the interest is and how well you actually pitch. But it's usually very successful, even just getting that feedback, getting in front of 28 CISOs in 2 weeks. Every company came out of this changed and pivoted a little bit or changed the way they're messaging. It's an immense amount of feedback, and being able to talk to 28 CISOs in 2 weeks is a really, really useful thing, and something that you really can't do anywhere else. One thing we can work on as well is, if you're a really busy company and you just have a lot of meetings and you have a lot of customers, sometimes you can't afford to go on the road for 2 weeks. So you could actually only maybe do 1 week of the roadshow of the customer sprint, and then defer the other week to the next cycle, because we do 2 cycles per year. We do a spring and a fall. So say, for example, you come in the spring cycle, you could just do maybe the first week of the roadshow, maybe that's Tampa and Philly, and then 6 months later, you'll do the New York City and Boston one, whatever works for you. We're flexible on that, or vice versa. We've added that into the program. These are just an example of some of our immersion partners. You could see kind of spans across many different areas, from large finance, Blackstone, American Express, BNY Mellon, large technology companies, IBM. We even have a lot of government partners, from FBI, the City of New York, the NYPD, Special Operations Forces. So it really just kind of depends what your startup is doing. Is it a physical security startup and you want to get into the government side? We do have connections that span across many of these different areas. We also, in addition to these specific customer meetings, we do set up one-on-one introductions to people in our network that are also very, very successful as well. But these are just the focused customer meetings where we go to during that 2-week period. So the other pillar on our program is what we call investor sprints. And again, it's a 2-week period. We reach out to our network of over 2,000 active institutional investors, and we basically set up one-on-one meetings for you. It's kind of another speed dating bit, but it's also a lot of matchmaking that we're doing. Generally, each company that goes through our program gets between 10 and 20 face-to-face meetings with investors. Again, it just kind of depends on, is your company in a hot area? Is it, kind of really ready for that investment versus more just kind of putting your toe in the water in terms of investment? Some of the hot companies get close to 30 meetings. Some of the companies that are a little more and less mature phase may get closer to 10. We do this on 2 coasts. West Coast on Silicon Valley, San Francisco; on the East Coast, New York City, Boston, and DC. We spend a lot of time prepping for this. This is one of the most valuable things that we do, because we are a VC. So we help you look at things in terms of how a VC thinks. So getting your presentation ready, your messaging on what a VC wants to hear, the difference between talking about a $1 billion total addressable market and a $500 million total addressable market is a really big thing, and how you message that, how you talk about a sales strategy, how you talk about traction, very, very important. We like to say investors generally say no 99 times out of 100. They only say yes one time out of 100. We want you to be that one time. And we're very successful in making our startups look very attractive to investors. We do a lot of prep for that. We also do what we call mock VC interviews or mock VC meetings, where we actually get one-on-one meetings with other investors or other leaders to really help you get ready for that, that Shark Tank-like feel in that investor meeting. We're asking you the hard questions up front so you know how to answer them. We find that these one-on-one meetings are far more productive than just doing like a demo day at the end of the accelerator. It's not like startup theater where you get like a bunch of people on a Shark Tank panel and they just kind of poke and prod you. These are real investor meetings that they want to move, they're going to decide very quickly if they want to move forward and move into an investment and move into a term sheet. Generally, what you want to do is get a lead investor for these rounds, either a seed or a Series A. If you are able to do that, then we also have the option of putting money into your company. I'll touch on that in a minute. But at the end of the day, about 50% of our startups do close around within 6 months of going through the program. Same with this sprint as the other. If you'd like, you could defer. You could actually defer the entire investor roadshow or the investor sprint to the next cycle, or you can split up the weeks as well if you're really busy. So there's a lot of flexibility there. Just to talk a little bit about what happens if you're accepted into the program, how we do our offer. We talked about no large upfront equity stake. Basically, you sign two things when you come into Dreamit. You sign an investment right agreement, and you can sign a convertible security. The investment right agreement says we have the right to invest up to $500,000 into your next round. We do that at a 20% discount of equity, which is kind of the fee for going through Dreamit. We don't lead rounds because we make so many investments. So part of the program is trying to get you a lead investor. And then we have the right to invest that capital. We generally, if we accept you into the program, we do want to put money into your company. We have the intent to do that. It can depend on a lot of other factors, getting that lead investor, but we generally you're kind of set up for us wanting to do that. The other thing you sign is a convertible security, which is not a convertible note. It's a $50,000 safe note, which is not debt, but it's something that kind of converts into the next round. It's not a cash investment. But typically that's kind of like an advisor equity fee for going into Dreamit. There's a couple of reasons why we do that, but at the end of the day, it kind of converts into usually around 0.25% of equity into the company. And the reason why we do that is sometimes we get companies that go through the program where we put so much value into them with the business development phase that they don't actually need to raise a round. And what we really want to do is put money into the company, because that's how we make money. So sometimes they don't end up raising around because they're able to get enough revenue. So we at least have a little bit of stake in the company. That's kind of how it works. But at the end of the day, the reason why we're successful and it's such an attractive program and a very, very fair program for entrepreneurs is we're aligned 100% with your interests. We only succeed if you succeed. We only succeed if you do raise a round and we invest in the company. So we're very, very aligned to get you to exceed. And that's what I really love about the program, because it's very, very fair in both directions. A little touch on what's coming up for the next cycle. So this is a bit of the timeline. We're in the heavy recruiting phase right now. We'll make our final interviews and offers in January 2019. We will kick off the first the cohort in late March, where we'll do a kickoff week that will generally be held in Tampa. We'll start prepping for the customer deep dives, and we'll do the customer sprints in April, May. Investor workshops will start in May or June, and then we'll do the customer sprint in June. I think it's the first 2 weeks of June. So it's just a little bit of the cycle and when kind of the timeline takes place. Again, these are some of the key dates. Application deadline is January 5th. We'll do our final interviews by the end of that month. and then we'll finalize the cohort by early February. We do have the option also of an early acceptance if there's a very, very attractive startup and we both agree on the timeline. We could do an early acceptance if need be. And as you can see, here's the cycle of the program. 14 weeks, kickoff is that last week of March, customer sprints, investor sprints. And again, you can defer some of those weeks or the entirety of the investor sprint. We're very, very flexible because we understand that sometimes people are really, really busy and you can't necessarily take so much time on the road. But I will say that especially for the customer sprint, it is very valuable to get in front of that many CISOs in a short period of time. Even, the one or two startups that didn't necessarily walk away with pilots, they still got a ton of value about feedback they need to put in their product and de-risking a lot of the assumptions that they had. Generally what we're looking for when it comes to companies, it's not necessarily a technology we're looking for. We're looking for somebody solving a very big and urgent problem. That it's a real big pain point for the industry. It also has a large market. We do look at the team, if it's a strong team with a good background in the space, and if it's defensible and scalable, always big things we look at. Generally, most companies that come into the program are at least 2 full-time employees. They have about 8 to 10 months of runway. They have some traction, doesn't necessarily have to be revenue, maybe pilots, but it's some referenceable customer that says, yeah, I would buy this or I have bought this, right? That's really a very, very important bit for us, right? Because it shows, nothing speaks louder than revenue and customers, right? It's like, I'm not your customer. I have my opinion on things, but your customer is, the CISO generally in the industry. What do you think about this? And then usually the companies that are coming in have some type of need to go out and get a seed or a Series A. They're kind of thinking about that, and we're helping them move on to that journey. Okay, so that was very, very quick overview. Spent about 20 minutes, like I said. I'd happy to open it up for questions, and I believe Charles is going to read off some of the questions.
Yeah, Bob, I have the first question for you here. Can you talk about the startups in the program and what kind of problems they're solving? And in addition to that, what you're looking for out of the startups in the next program? What are some big issues or spaces that you see as white spaces in the market?
So you're saying what the startups that are currently in this cohort, what they've been solving? Is that what the question is? Okay. We did in this last round, had quite a few cyber companies. And generally the biggest and urgent needs that we had were solving a lot of the holes that exist within the security operations center today, either by making the operations more efficient or effective. I think that's probably one of the biggest pain points that I've seen. So we had one company that's using dark web intelligence to help your vulnerability patching be about 2,000 times more effective. No exaggeration, 2,000 times. That's a huge need. Or we had companies that are one of the bigger pain points in the SOC is hiring. How do you hire enough good people? We have a company that helps evaluate people references that are coming into your hiring pipeline or candidates into your pipeline. So making that more efficient and effective. There's a lot of work to be done there. That's kind of the most pressing and urgent need. I think going forward, some of the white space in the market that I see not many people tackling is, I'd say, this connective tissue that needs to exist between the technical side of security, like the people in the security operations center, and the leadership, being the risk management leadership, the CISO level leadership, the C-level guys. There's not a lot of products that really bridge that gap or do that effectively. And that's really something I'm looking at, as a white space. Hopefully.
Got it. Second question, what types of relationships or opportunities exist within Dreamit for alumni companies? How do you guys engage with alumni going forward after the cohort's done? And what kind of future partnerships do you guys offer?
Yeah, that's a good question. I get that question a lot. Once you come into the program, we do have that very focused hug that we're giving you for 14 weeks, and we're very, very involved. I'm talking to you. Cameron's talking to you. And with our program, we got very close with our startups. We're pretty much talking on a daily basis. We do have a weekly meeting where we're an hour on Zoom talking when we're not in the sprints and we're with you all the time. But we have a Slack channel where we're all communicating. And I would say that pretty much every company we've talked to, answered questions, helped every day. Once you kind of get out of that 14-week period, you still maintain access to kind of our alumni Slack channel. And it's a very, very strong network. I believe there's over 500 companies that are still in that network and across many different verticals. So a lot of times people leverage that for looking for, putting out job applications or job, you want to hire a new person for a position, they put out that information there, or look for tips on getting a lawyer, stuff like that, just kind of general things. But we're also available for, help and mentoring and guidance when you need to as well. We're still kind of there and linked into your network. A lot of times what it comes down to is, 6 months down the road, a year down the road, you get that, round open, you get that term sheet, and you guys like, hey, you're the first one I wanted to tell about it. Here's my term sheet. Can you check it out for me? So there's still that help and mentoring and coaching that exists that we do through the Slack channel. I'll also say that more so for the companies that we end up investing in, but it still impacts all the companies. But for the companies that we end up investing in, we still maintain a very active BD presence. So, and I do this all the time when we come across. So for example, we have one company, Silera, right? Silera does network security for kind of medical IoT devices. And there's not too many solutions in that space that are very effective. And we deal with a lot of medical companies all the time. I run into CISOs all the time. I always recommend them to those people, because the CISOs always tell me about that problem. I say, oh, I have a company for you. Let me do that link up and meeting with you. So there's still that matchmaking and networking that will exist forever, when you're in the program. And that is still very, very active. But it's not, it's not as much of an everyday thing. It's a buy, when you need it kind of thing after you finish the program.
Another question, can you talk about the customer network, and what if the customers for my startup are outside of the customer network, or if you guys have some customers and there's some overlap, but we're targeting other firms as well?
Yeah, that's a good question too. So the customer network, we've tried to make it as broad as possible, and it's always growing too. We're always, bumping into new people at conferences, or a lot of what the customer network, especially for me, are people I used to work with in the military and the government, because everybody from the military and government is getting hired into the private sector, right? So my old boss that I used to have at NSA, she recently got hired last year at Morgan Stanley. She's one of the head people in security at Morgan Stanley. So, that kind of stuff happens frequently. So it's always expanding and growing. But yes, we did have one company come into the program last cycle that didn't 100% align with the existing customer network we had. And we essentially built one bespoke for him. We went out and we just kind of hit our network. Within Dreamit total, we have a very broad and wide network. This particular company, they were a tourniquet device for soldiers and law enforcement. That it was a wearable tourniquet system where you can use it and leverage it if you were wounded or shot. We were able to go out and get him connections to companies that would perhaps engage in a strategic project with him, like Under Armour, Gore, I'm blanking on a few, 3M, DuPont, others that, weren't necessarily part of the customer network explicitly for that sprint, but we set up a bunch of meetings for him and made it very, very valuable. Cameron as well. He has a very strong network in the military side of things. I do too, but he has kind of more focus on the special operations forces. And he set this person up with quite a few meetings in that alone. So we have no problem kind of hammering our network and setting up these and these meetings.
Great. And one more question. If anybody else has questions, definitely get them in right now. One more question. Can you talk about a success case or anecdote from the previous program? And what would be, an archetypal success story for a startup graduating from Dreamit?
Yeah. So one startup that went through, there was a dark web startup that I mentioned. Um, they were doing very well, but think they need a bit of polish, trying to get a few key customers. And like for example, we were on the investor sprint, and we were meeting with Morgan Stanley, and they had been trying to get into Morgan Stanley for a while, and they just haven't had the best of luck. They were kind of like knocking on the door, but there was so many people, trying to get into Morgan Stanley, brief Morgan Stanley. It was just not being noticed. We went in and pitched the person who does the kind of the lead technology acquisition for Morgan Stanley, and that person walked out and said, this was one of the most valuable things I've been to. And probably within an hour, he emailed that startup and started to set up a pilot with them. Or they're, starting to talk about a pilot with them. So it kind of rapidly accelerated that process that had been taking him months and months and months, and he was getting nowhere. He's since gone on to several POCs and pilots that, kind of that have helped him out getting into new spaces. And it just made him very, very attractive to the investors as he was going out there. He was already attractive, but it made him even more attractive, right? Because he's walking out of it like, yeah, I just met with 30 customers and 6 or 7 of them are moving into pilots. That's a very big thing. Now he's currently on the investor roadshow, but he has had the most meetings set up for him, and he has also had the most follow-ups. So we're still he's still on it. He's still in the process of talking to investors, but you could tell that he's very, very good chance of getting that Series A, and kind of and being in a very good position, in a very strong position when going into those investor meetings. So I think that was a really good success story from what happened in this last cycle.
Awesome. And one final question. Someone asked, can you talk about how the roadshow participants or the customer network have been vetted? Do they have budgets to adopt the tech solutions that come out of Dreamit?
Generally, yes. I mean, I'll just tell you the basic way we vet these customer partners is most of these customer partners are larger firms or government agencies, and they're hungry for innovation. They are really sick of the IBMs and Ciscos of the world that are not really reactive to some of their needs. And they really want to understand what some startups out in the space are doing. What are the more innovative startups doing in the space? And they just don't have time to screen through startups and talk to startups. They don't know who's good or not. And they kind of look at us and leverage us for our expertise. They're like, hey, you've already, I had one customer at Penn Medicine, the CISO of Penn Medicine, say, you brought me 6 startups. We took 2 hours, and I heard from every one of the startups, and I succinctly understand what they do, and I will probably be moving forward with some of them. And you did that in 2 hours with 6 startups, and you went and screened through 300 to get to meet those 6 really great ones. And you did it in 2 hours. Most companies, startups, when they come here, they ask for 90 minutes just to talk to one, and I don't even know if it's good or not. And he's like, you just set the new bar for me. So a lot of them are definitely looking for those innovations. They will make budget for for something that's really hitting a pain point for them. Can I say that they actually have a budget set aside and looking? I don't know. In some cases, yes, but most of the time, if it's a really big pain point, they do it. And part of the value too is, there's a little bit of a give and take relationship. Like, you're a young startup. You only have 3 customers. You just walked into Morgan Stanley and they want to do a pilot with you, right? Well, that can really escalate you to the next level. So there may be a give and take of like, okay, well, I'll do a free POC for 90 days. If I'm allowed to use you as a reference. So there's a little bit of negotiation that can come there, but it really just depends on the company, what the pain point is, and a lot of different things. Some of the pilots that the companies are walking away with are paid, and some are free. So it just kind of depends on a lot of different circumstances.
Awesome. Well, I think that's it for the Q&A. I just wanted to send a reminder about applications. We are evaluating applications on a rolling basis. So please submit your application if you're interested in the Spring 2019 program. And thank you so much, Bob, for giving this information session and this Q&A.
All right. Thank you so much.